Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Chicago wheat and corn. Chicago wheat. The main recent activity has been the fall below the significant neckline extension, currently at 654, of the small October 2020 to November 2020 head and shoulders top, which you can see highlighted on my daily chart in dark blue. This neckline has a fairly wide congestion area clustered around it, formed from late April to mid-July, from about 609 up to 679, and includes the declining long moving average, currently 669, and just below it now the flatlining medium moving average, currently at 643. It is this that had been pressuring the top of rallies throughout September and now into October. Last week I also said, and I quote, "We have also seen a pattern form over the last few weeks. The pattern I have in mind is an unusual one. It is one that immediately springs to mind but looks in the wrong place, and that's to see the whole of the late May to end of July action as a double top of a neckline, the same neckline extension of the small but influential October to November 2020 head and shoulders top." Now I have, and the quote, "Now I have been racking my brain and looking up patterns over this, as I knew it was a specific pattern, and this week I came across it by accident in looking up something else. It is called a cat's ears pattern, and is in essence a double top, but in an overall previously moving downward or bearish market. It is not that rare, but enough that I'd forgotten the name. So now I have its name and a potential target for below for this pattern at X2 at 502 even area zone. However, before we even look down there, we have some interesting supports. Notably, and on a closing basis, the May 2023 low at 587 3/4, which is just below the March 2021 low at 592. And on a pure low basis, the September low at 570, which was tested at the turn of the month from September into October, and so far has held. Further down we have the September 2020 low at 545 and the slowly rising 2016 today optimized uptrend, currently at 519. Interestingly, the potential target X2 is also just above some quite historical congestion supports between 495 and 5 even. Thus, we have a very much harder to reach target below, and for now I will leave it as such because there is something else developing which looks of more immediate interest but of a bullish nature. It is the action since mid-September to date, which looks like a possible horn bottom. It may even be seen as a triple bottoms with early September's action, but that is only on a continuous daily chart. For now, I would look to the late September to date action as a possible horn bottom with a primary target X higher up in the 640 area and the secondary harder to reach target X1 in the 650 area. If these are to happen, then we should see some appropriate action in the next 1 to 2 weeks. So watch carefully. However, I am less confident of achieving these immediate targets this week than when I first pointed them out last week. Chicago corn. The medium moving average, currently at 510, highlighted in purple on my daily chart, has been an effective cap on the market since about March. Even last week when it was penetrated, as it was also back in June. On both those occasions, it held down the market despite the penetrations. Last week, with a push up over the medium moving average, we also saw a push up over the October 2021 low at 516 and towards the combination of the 2014 high and the 61.8% absolute Fibonacci line, both at 525. But these moves higher failed with a bearish harami last Friday that turned back prices down, eventually pushing through the lower bull channel line, currently at 510 even, of the recent mid-September to date bull channel. Now this channel is highlighted in green on my daily chart. Since late July, the market has been trying to form a potential rounded bottom based on the low formed back in mid-July at the 473 level. However, the primary pattern here was not this rounded bottom, but as was noted by me 7 weeks ago, and I quote, I looked last week at the action since mid-May to possibly be a descending wedge pattern. This pattern is not complete yet and has a girth that I'm not too comfortable with given its duration, but it also still stands out." End of quote. Well, since then the pattern has cohesively formed and we have had a considered move higher, up and out of this pattern. Thus we have some potentials for the top side. The primary target X for the pattern would be in the 583 area, with a secondary hard to reach target X2 up in the 634 area. The first real topside obstacle had already been reached and punched through, and that was the 490 to 498 congestion that includes the 2021 lower 498, as well as the flatlining short medium moving average currently at 493. This is now support, but with the move down out of the recent bull channel, this support is again being tested and is currently holding. Right now there seems to be enough ammunition from the base formed over mid-August to mid-September to be able to hold the decline from the bull channel, but I am wondering how long that ammunition and this move lower might last. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.